prices declined today in volatile trading as investors assessed the potential for new supply in the tight market amid prospects of a new Iran deal. Brent futures were down 58 cents at $121.02 a barrel, and U.S. West Texas Intermediate futures fell 96 cents to $113.97 a barrel. Both contracts rose $2 and $1 respectively, and that happened in early trade. White House National Secretary Advisor Jake Sullivan has said that the United States and its allies have made progress in Iran nuclear talks, but issues still remain. A lifting of Iranian export restrictions would help alleviate the immense tightness prevalent in the crude market at the moment. Iran is already preparing for a ramp-up in exports, and the state refiner has reportedly started to reach out to former key customers in India and South Korea. Oil markets jumped more than 5% yesterday following reports that crude export from Kazakhstan pipeline had completely halted following a storm that damaged it. Russia's deputy prime minister said that oil supplies could be stopped for 2 months. Well, we'll talk about oil and, of course, some other commodities in the global space and, of course, in the Nigeria space. We'll talk about that with Longida 4. Longida 4 is an analyst with a financial derivatives company. Hello, Longi. Good morning.
Hi. Good morning. Thank you.
Good to have you second time this week.
Yes.
So oil prices this morning has hit like 122. So that should be good for Nigeria. But I mean, let's look at it from the global space, from what's going on. We see U.S. seems to be inching close to sealing a deal or settling the matters with Iran. And that obviously would affect supply and price eventually.
Yeah, definitely. It should. The prospect of the Iran deal actually pulling through would be very beneficial for the market. As we know, the market is currently experiencing huge bottlenecks and extreme tightness, more than we've seen in a very long time. And this Iran deal actually coming through would very much help to alleviate some of that tightness that we're currently seeing. And actually, apart from that, what is actually really pushing the markets, of course, we know is the overarching narrative of what's going on in Ukraine and Russia. But most recently, of course, we had the Kazakhstan pipeline halt, and that's also causing issues and the market to jump up recently. Also, as well, U.S. crude inventories declined last week by about...
What happened?
I think about 2.5 million barrels. Crude inventories declined. And also, our crude reserves also declined by about 4.5 million barrels. So, obviously, when we have inventories declining while U.S. production is steady by about 11.6 million. The only thing that prices can do is go up. So that's
and the U.S. seems to be feeling this pinch a whole lot. I know I watched a couple of Americans talking about the price, and the price was about over $4 per liter, you know, and that's like the highest they've had in a very long time. I don't know if they've hit that before now. Yeah,
it is the highest they've had in an extremely long time. And of course, it's really affecting living standards, really affecting business activity across the country, which is, of course, having spillover effects for the rest of the world. As we know, the U.S. is king, and when things shake up there, it shakes up the rest of the world as well. So that's what we're definitely seeing happening.
So what about the efforts to get UAE into, you know, the West supply, get Saudi Arabia, and then I know that Germany and Qatar, they had an agreement some days ago. What about those efforts and agreements? They've not started yielding?
So no, the efforts have not really materialized yet. We do know that OPEC is keeping a really tight leash on their members. UAE has actually come out and said that it stands with OPEC fully in support of whatever OPEC chooses to do. So no, the deals and so on that we've seen have not fully materialized, and it remains to see whether they might actually materialize in the end, given the tight rein that OPEC has on its member states. Yeah.
So Russia is a member of OPEC Plus.
Yes.
Right.
Indeed.
So what do they have to do? OPEC Plus, a lot of the members of OPEC Plus are against what Russia is doing in Ukraine. What are they doing in that space about it?
Well, OPEC really isn't fully taking any major actions as far as we have seen against Russia, other than, shall I say, choosing not to raise its production levels and sticking to the same output plan that it had already.
400,000
barrels per day, exactly. So it remains to be seen whether OPEC might still take actions going forward. But what we do know that U.S. President Joe Biden is in Brussels today to speak with EU nations,
NATO.
and other NATO countries. Also, it remains to be seen whether more sanctions might be placed on Russia's crude and energy exports. So that might still help to push oil even further.
But as a member of OPEC Plus, doesn't OPEC Plus have a responsibility to also... A lot of people are ditching Russian oil.
Yeah.
Right. Doesn't OPEC Plus have a responsibility to also protect one of its own, which is Russia?
Which is Russia. Yeah, it is a very
That's a tight thing there.
I do believe that Total Energies has actually announced that it will be pulling out of Russia by end of 2022 at the latest. So we are seeing oil majors taking action against Russia. But then in terms of OPEC and OPEC Plus, it remains to be seen what they will actually do.
So I want to ask this. It's been on my mind for a while. I've not been able to get an answer to it. We have the UK saying they're going to cut ties with Russian oil and energy by the end of the year. What if the war ends today? What happens? I mean, do we just go back to business as it was before the war, or will they go ahead? What do you see them do? Will they go ahead, you know, and say, no, we don't want to deal with Russia anymore? And of course, there's a price to pay because energy costs in those countries, in Europe, in Germany, in UK, it's hitting the roof.
Yeah, so I do believe with the onset of this Russia-Ukraine crisis, the world has definitely undergone a tectonic shift. So I do not believe things will go back to business as usual, no matter what happens in the next coming months. So yeah, it still remains to be seen. We can't predict the future. But
what lessons do you think Nigeria has learned from this war?
Definitely not to make the world angry. I'd say that's the first thing. But yeah, definitely, I think Nigeria definitely has learned the benefits of diversifying its export revenue. So, yeah, exactly, of diversifying its export revenue and possibly maybe trying to cut down with subsidies, because we do know that the huge cost that the subsidies have brought has really been affecting Nigeria and, of course, the nation's fiscal position. So I do believe those are the key learning factors that Nigeria
but we can't say we have learned it except we start implementing it.
Exactly, exactly.
And then we see that the Naira has crashed to 590 in the midst of forex scarcity. The forex scarcity is not new, but is it getting worse?
Yeah, it is getting worse, especially with everything that's going on globally. We do know that diesel prices, of course, are on a tear globally, not just within Nigeria. In Nigeria, of course, we know trading somewhere between 750 to 800 Naira. And this is, of course, really affecting our transportation costs, which is, of course, also pushing up the prices of goods and services. I think it also really paints the it paints the picture that the inflation that we're currently seeing in Nigeria is, in fact, a cost push and not demand pull. And the only way that the government might be able to solve this cost push inflation, rather than traditional monetary policy increasing interest rates, is to find a way to boost supply. How are they going to boost supply? Make forex available for manufacturers.
Make forex available from where?
Exactly. External reserves right now about $39.58 billion or so. So I do believe we need to at least earmark maybe about $3 billion just for manufacturing imports, to allow manufacturers import the necessary goods that they have and boost supply and, of course, cool prices domestically. Yeah.
It sounds easy, but sometimes it feels like, I mean, I remember the other time we had the Eurobond and all of that. We had the SDR, and then we saw the reserve was up for a while, but it didn't seem to trickle down to manufacturers, the aviation sector, and all that. Maybe there are some stoppages in the system.
Yeah, there are definitely stoppages. And also, one thing that is important is that what we have actually discussed now is actually a short-run solution. It's not going to solve issues in the long run. Long run will take serious combined efforts and a lot more to put into actually get that done. Yeah.
All right, and then I think we're still basking in the euphoria of the fertilizer.
Yes.
Dangote fertilizer. A lot of expectations from there. A lot
of expectations.
Yes,
exactly.
but I mean, let's look at it. Some people have said that Dangote is a commercial entity. They're here to make profits. So do we expect them, or because Dangote is here, fertilizer is just everywhere and accessible?
No, unfortunately not. Also, one thing that we should note in terms of the fertilizer thing is that fertilizer prices are high globally.
Yeah, I think it's the highest.
The highest
globally,
it's probably ever been. And like you said, Dangote
so it's a good time for Dangote, because Dangote will just...
So he can choose to export and reap more funds rather than selling domestically in Nigeria or fulfilling total domestic supply. So it remains to be seen what might actually come from that. But of course, we do expect it to reduce dependence on imports of fertilizer and hopefully increase agricultural output domestically.
How soon should we expect to feel the impact of this Dangote fertilizer plant?
Hopefully within a year at most. We should hopefully expect to see the impact of the plants within a year. I believe 3 million metric tons or so of annual capacity. That's huge, and that's really going to help the nation. Yeah.
And then there's a cash crunch, which has driven commodities. I think we've talked a lot about this natural gas. Natural gas is also another thing. I know this is one area that we say Nigeria has the potential, but we seem not to be tapping into, or we ought to be enjoying from this area.
Yeah, definitely. Natural gas production is definitely not where it should be. And we do hope that we will see things rise and improve as things go on. But in regards to what is currently happening with the commodity, or rather the commodity and cash crunch, commodity traders globally are being forced, rather banks are asking...
When you talk of commodities here, you're not talking of food commodities, you're talking...
Not just, let me actually elaborate. So natural gas, wheat and oil specifically.
Because you also have the aluminum, you have, the gold, you also have all of that as the commodities.
As commodities. So natural gas, wheat and oil specifically, banks and exchanges are actually asking commodity traders to bring out more money, or rather to stake more funds up front. And this is really causing liquidity to plunge in the global markets. And of course, when liquidity plunges, it leads to higher swings, higher margin calls, and of course, increased volatility, which is not good for prices.
And one of our staple food, I mean, if we're talking of commodities, we should know that it will affect our staple food, rice. What's going on with that?
Rice. So in terms of rice, we do know that Kenyan farmers are actually quite happy right now. So rice imports, rather rice production in Kenya is expected to increase by 12% by as early as October, because they have finished building the Thiba Dam. So this Thiba Dam, which is about 1 kilometer long, I believe, is expected to boost the Muya irrigation system, which provides about 80% of production, rather irrigation for 80% of production that goes on in Kenya. So this is really going to help boost their rice production.
What about Nigeria? What's going on with our own production?
Well, I do believe the price of rice in Nigeria right now is about 32,000 naira. So in terms of rice production in Nigeria, it's, like we said, it's not where it should be. But we hope that things will get better in the meantime.
So what else is going on in the commodity space?
Like we said, I think the main thing, which we've already discussed, the main things, oil, what's happening in Russia, Ukraine, rice, and so on. So I do believe we hope to see commodity prices cool off in the near term, although it looks unlikely. Yeah.
Well, let's be hopeful.
Yes.
I think and pray that something can just push it. There'll be one major driver that'll get it out.
Exactly. Yeah.
All right. Thank you so much, Longide, for analyst with Financial Derivatives Company. Thank you for sharing your thoughts with us.
Thank you for having me.